Silver is trading near $80 right now, but something just changed. Not small, not normal. The silver market is starting to behave very differently from what we've seen recently, because this is not just another move, not routine volatility. What's happening right now suggests that pressure inside the silver market is beginning to surface faster than expected. Silver just tested a critical level near $80, and now all eyes are on 83.50. Because if that level breaks, momentum could accelerate quickly. Not slowly, not gradually, fast. That's how these moves happen when pressure builds underneath. And recently, we already saw a major signal from the Shanghai trading halt. When trading gets halted, it's not random. It's a response to volatility rising too fast. And that kind of reaction usually points to deeper stress inside the market. And this didn't start today. For months now, supply has been tightening while demand continues rising. That imbalance is what slowly builds pressure underneath price movement. But the real question is this just another short-term spike or the early stage of a much bigger silver shortage forming right now? Because when pressure reaches a certain level, the silver market doesn't wait. Price moves quickly, and by the time most people react, the move is already underway. But this isn't even the real problem, because what's happening underneath right now could be directly linked to something much bigger building inside the silver market. So what actually happened here? Recently, trading disruptions appeared again. And when something like this happens inside the silver market, it usually means volatility is increasing faster than expected. Now understand this clearly. Markets don't pause without reason, not randomly, not suddenly. When volatility accelerates, systems react to control the speed of price movement. At first glance, this looks normal, a technical response, something designed to prevent panic. But beneath that surface, something deeper may already be building inside the silver market structure. Before we go deeper, I want your view. Do you think this is just temporary or the start of something bigger forming right now? Comment below. Temporary or bigger move? And if you're tracking the silver market closely, subscribe now, because most people watch these moves too late. By the time they understand, the opportunity has already moved ahead. Now here's where things get interesting. Just days ago, data confirmed something critical. A multi-year silver shortage trend that has not been resolved yet. Now look at what just happened. China recently increased silver imports to multi-month highs, driven by rising solar demand. That kind of demand doesn't happen without serious supply pressure building. And this is where most people get it wrong. Retail watches price. Smart money watches supply and demand. And right now, that imbalance is becoming harder to ignore. When supply stays tight and demand continues rising, the result is not stability. It creates pressure that eventually forces the market to react. And that reaction is what we're starting to see now. Not randomly, not slowly, but through volatility spikes and unusual trading behavior across exchanges. So this isn't just about price movement anymore. It's about positioning. And when positioning builds under pressure, it can lead to much larger moves than expected. Because what's driving this isn't just volatility, it's positioning, pressure, and something most people are still underestimating in the silver market right now. So what's really driving this move? It's not just volatility, not just demand spikes. What's happening right now is deeper. It's pressure building inside the structure of the silver market, because markets don't react like this without force. Something is pushing from underneath. And when that pressure builds long enough, it eventually forces price to respond. We've already seen the signs. Tight supply, rising demand, and now unusual behavior across exchanges. These are not random signals, they are connected. And when these signals align, the situation changes. Because this is when positioning starts building quietly before the move becomes obvious to the rest of the market. Now this is where the silver squeeze narrative begins to matter. Not hype, not speculation, but the mechanics of how pressure builds when supply cannot meet rising demand. A silver squeeze doesn't start loudly. It starts quietly, slowly building underneath until one moment it becomes visible through sudden and aggressive price movement. And by the time it becomes visible, it's already late for most participants. Because early positioning happens before the breakout, not after it. This is the difference. Smart money watches pressure. Retail watches price. And right now, that gap is starting to widen again inside the silver market. Because when pressure builds long enough, it creates imbalance. And imbalance forces movement, not controlled, not stable, but fast and unpredictable. And this is exactly where things start to accelerate. Not at the beginning, not at the obvious stage, but right when the underlying pressure becomes too large to ignore. So this isn't just a price move anymore. It's a reaction to something that has already been building for a long time beneath the surface. And if that's true, then the real question changes. Because now it's not about whether something happens, it's about how big this move could become next. Now let's look at the data. because this isn't just a theory. The latest silver news shows that pressure inside the market has been building for a long time. For years now, we've seen a consistent silver deficit forming. Not 1 year, not 2, but a multi-year imbalance between supply and demand across the global market. And when a silver deficit continues like this, it doesn't disappear suddenly. It builds pressure over time, pressure that eventually reflects in price behavior and volatility. Now look at Shanghai pricing. Recently, silver in Shanghai has been trading at a noticeable premium compared to global markets. That's not normal behavior. When one market trades higher than another, it signals local demand is stronger than available supply. And that's exactly what we're starting to see now. At the same time, the gold-silver ratio is still elevated. And historically, when that ratio starts correcting, silver tends to outperform gold aggressively. So this is not just about silver price today. This is about positioning for what comes next. Because when these conditions align, the market rarely stays stable. And this is where silver price predictions start changing, not based on hype, but based on real data, real imbalance, and real pressure building underneath. Because once pressure reaches a certain level, price doesn't move in a straight line. It accelerates. And that's when the silver bull phase begins to gain momentum. And when that happens, most holders are shocked. Not because they didn't expect it, but because they underestimated how fast the move could actually happen. So right now, the market is not stable. It's in a deadlock. Supply pressure on one side, rising demand on the other, waiting for a breakout. And when that deadlock breaks, the move is rarely small. Which brings us to the most important question. What happens next from here? So what happens next? There are only two realistic paths from here. Either the silver market continues building pressure, or it pauses briefly before the next major move begins. Right now, silver price is holding near $80, but the real focus is one level, 83.50, because that level controls the next phase. If that level breaks, momentum doesn't stay slow, it accelerates. And when acceleration begins, it often signals the early stage of a larger silver bull move. In that scenario, silver price predictions start shifting quickly, not gradually, not cautiously, but aggressively, as more participants begin reacting to the same breakout signal. At the same time, the silver shortage narrative becomes stronger, because price doesn't move like this without underlying supply pressure already being in place. But even if price slows down temporarily, that doesn't remove the core issue. The silver deficit remains, and that means pressure is still present inside the market. So a pullback, if it happens, is not a reversal. It's a delay, because structural imbalances like this don't disappear quickly once they reach this stage. Now, here are the key signals to watch. Continued volatility spikes, rising physical demand, and more disruptions across exchanges. These confirm pressure is still building. And if those signals align, the move becomes faster, more aggressive, and much harder to predict. That's when markets shift from stable behavior into acceleration mode. Because historically, when supply pressure and rising demand align, the outcome is rarely small. It tends to create strong and sustained movement across the market. If this pressure spreads continuous, especially this week in trading, this situation could change very quickly and potentially trigger a much larger move across the silver market. So the real question is not whether something happens. It's whether you recognize it early or wait until the move is already obvious to everyone else.